Hello and happy Mini Masterclass Thursday. We are bringing you scary bookkeeping tales from our actual experience and from things we've seen over the years today. It is just a little over a week before Halloween to next, no, a week and one day from Halloween. So we wanted to bring you these scary tales, not just for something fun, but also so you can hopefully prevent putting yourself in any of these positions or other positions down the road. So, if you're joining us live, feel free to pitch in if you have horror stories that you've either experienced or heard about. Of course, not giving away anybody's names or pertinent information to their identities, but feel free to pitch in because we'd love to hear other people's stories too, because that's how we all learn. But I have about, I don't know, eight or so stories I'll share with you today, and hopefully you never have to go through anything like this. But the bottom line of every single one of these, they all have a common denominator, and that is bad record keeping. Not having accurate financials, not actually doing the bookkeeping, not following compliance. Several of them are compliance related, which is sort of bookkeeping and sort of not. And I'll go through kind of some more specifics on that with you. But yeah, just in general, not doing things the way they're supposed to do them. Now, in every single one of these cases, they found us because they were in these circumstances and they needed to bring in a professional to get them out of whatever trouble they were in, or to correct whatever the issue was, or to try to figure out why things were happening. So, bottom line there is that if you work with someone that knows what you don't know, that can help guide you along the way, who can tell you when things are not right or when things pop up that could be troublesome for you, you are only going to save yourself so much time, money, heartache, sleepless nights, all of the above. And it is not a cost. If you don't think of it as a cost, it is an investment into the long term success of your finances, of your wealth, of your health. Money stress will make you sick so fast. And people don't realize that when you're just not following rules or just thinking, oh, I don't have to follow that rule because I'm a small business, it doesn't really apply to me. And then things start to, turmoil happens and things start to unravel. You get audited. Nothing's the way it's supposed to be. That is so much stress on yourself. So avoiding all the stress, all the sleepless nights, all the unforeseen costs that there's going to be some cost, but you didn't think about this trickle and you didn't think about that trickle. It is a big snowball when these things happen. So just do yourself a favor and work with someone, even on a consulting basis, that can help you. So without further ado, I'm going to go into my horror stories that I've seen along the way over the last 10 years. These are in no particular order. I just wrote down kind of ones that stand out in my brain. And of course, God, I could not possibly tell you every single bad story in 30 minutes, but I wanted to bring you the ones that were like, whoa, that could have totally been prevented. And it was a nightmare. It really, really was. So, first one I have is we deal a lot with contractors, mostly with contractors. So I had a contractor customer who decided he didn't need to follow any of the rules. He was a one man band and nothing applied to him, and he didn't want to do it the way was being suggested for him to do things. And he didn't think it was that big of a deal, and no one gets audited anyway. He physically said those words out loud. No one gets audited anyway. And that was a result of him knowing people who had owned businesses who had never been audited. So in his reality, nobody he knew had ever been audited in business, and they had been in business quite a long time. He'd only been in business 2 years when guess what? He got audited. And he got audited because of a disgruntled employee, not even because of the record keeping, the taxes, the non-compliance, the any of that. It was a disgruntled employee who decided to tell the labor board in his state that they weren't getting their overtime payments. Well, guess what he had been doing? He had been paying overtime in cash. Please don't ever do any of this. This is like a PSA of what not to do. He had been paying overtime in cash. So when this employee decided he was disgruntled, he knew there would be no record of him getting overtime because he'd been paid in cash. And there is no way to prove, unless it's very clearly, cleanly documented, in which case you would be paying taxes on your overtime. He knew better. So he called the Department of Labor and he said, I'm not getting my overtime. I'm working it. I'm not getting it. So there ensues a Department of Labor audit. Through the Department of Labor audit, it uncovered almost every single thing you could possibly imagine that this contractor had done wrong or not done at all. It uncovered missing W-9s and 1099s. It uncovered missing source documentation because in an audit, they don't give a flying squirrel about what your statement says. They want to see the source document, which is the receipt, the invoice, the bill, whatever it is. They want to see that level of detail. Makes no difference whatsoever if it's on your bank statement. They don't care. It uncovered reasonable compensation that hadn't been paid out to the owner officer. He had been taking all the draws he wanted, but was not paying himself reasonable compensation in addition to that. It uncovered employee checks that had not been run through payroll, which means no payroll taxes were ever paid on that money. And that's a no-no when you have employees. Once that they're an employee, you have to run everything through payroll. It uncovered that there were no receipts for reimbursements that were paid. All of these things. It also also uncovered that the trips that he was saying were travel related for his business, there was no documentation on how they were business related. Therefore, through this audit that was triggered because of a disgruntled employee, not only did he have to come up with all the back taxes, he had to come up with the auditor assessed his reasonable compensation for 3 years in a row of what he should have paid himself versus what he paid himself on payroll. And he had to come up with all those taxes, penalties, and fines. A lot of the write-offs that he took were disallowed because there was no source documentation. And once an auditor finds like a giant, massive problem like that, they're just going to keep going. They're not going to become more and more lenient the more they find. They're going to keep searching and digging and finding as much as they possibly can. So this person deciding that he did not have to follow direction, follow the rules, do compliance, keep his receipts, any of that, paid cash for overtime just because he didn't want to pay on that. That ended up costing him, I believe the grand total of the audit ended up somewhere in the $175,000 range over a 3 year time span. Because guess what kept happening? They asked for one quarter, then they found all the things they found in that quarter. So they asked for the next quarter, found even more things, asked for the next quarter. This audit went on for over a year because they just kept finding things. They just kept finding things. So that is a nightmare. $175,000. Do you know how much it would have cost him probably to have had an accounting professional doing all this work for him, keeping him compliant, making sure he was doing things the right way? Maybe, maybe $36,000 over that couple years. I mean, imagine. Imagine the ROI on that investment right there. So, next nightmare story I have is a retail customer. So, through the years, we've helped all kinds of customers in all industries. And one of them was retail. And they came to us because they had for years and years and years not used an accounting system, tried to track everything on spreadsheets, were not doing a good job at that. And then when they got an accounting system, just completely did not even know how to use it, weren't using it the right way. didn't educate themselves, didn't invest in training. They just, oh, well, I'll just download it and go. So by the time they got to me, they had, I believe it was 5 years of sales tax that they had never paid out on all of the orders that they had received. The reason that they had not paid it out was because they were not tracking and separating what was tax from what was their sales. They were lumping everything together. They would figure it out. They would charge their customer. When the customer paid, the money got deposited into their account, and then they just used the money to run their business and draw from their business and never separated what was sales tax. And in the meantime of them between them getting off of Excel and into QuickBooks, that but not knowing how to set up QuickBooks correctly, when they started invoicing their customers, they were not using the sales tax tool. Therefore, they still were not. They were like figuring things out on the side and then just invoicing for a total dollar amount instead of separating out the sales tax. After 5 years of this happening, the State Board of Equalization, which is the agency in the state that they were in, came and audited them for their sales over the years. They weren't filing their quarterlies, they weren't doing estimateds. They were supposed to at least file annually, and they hadn't. So finally, they got audited and they had to come up with 5 years worth of back sales tax. Now, this was a pretty successful company at that time, pretty busy, good volume. So the amount of sales tax that they ended up needing to come up with was in the $50,000 range from that 5 years. They did not have $50,000. Not to mention that that didn't include the penalties and fines and interest that were going to be added to that 50,000. So it really became like almost 65, I want to say. I can't remember exactly. It's been several years, but they don't have that money. So they made a payment arrangement. The State Board of Equalization was nice enough to tell them, we will make a payment arrangement on your arrears, but you have to keep up your current. There is no excuses, and you have to pay it monthly. Now you can't wait and do it quarterly. And the second that you lapse on your payment agreement for your arrears, all of our agreement is voided, and you then owe the entire amount to us, or we will shut you down. Well, guess what? Times got tough. They could not afford the arrears payment, and they missed one or two of their current payments. Therefore, completely voided the agreement from the State Board of Equalization. They missed their full payment. They had a deadline to make it by. State Board shut down their sales tax license. They make their money by having sales tax selling a product. They could not operate their business. There was nothing for them to do. They had to close their business until they could pay off tens of thousands of dollars of debt to the State Board of Equalization. I do believe that they end up taking a mortgage out against their home to make up for that amount, because there was no way for them to survive if they did not have their business. So now they've mortgaged their home to pay for their debt. And even though they had a payment arrangement, so that could mean down the road that they might lose their home if they can't make their mortgage and the second mortgage on their home payment. So these are the types of positions entrepreneurs never expect to be in, ever. No one ever goes into business and thinks, oh, someday I'm going to have to take out a mortgage on my house because I'm going to be so far in debt that I can't possibly pay my bills. Nobody thinks like that, but these are the realities of things that have happened to real people. They are small businesses, and the mindset of it doesn't matter because I'm a small business is so far from the truth. It matters so much, and it probably matters way more because a giant corporation could come up with the capital to fix a problem pretty fast, either but with lending or, reserve money or whatever it is. But small businesses can't. They just can't. So that was a sales tax nightmare. I've also worked with a restaurant who had almost the exact same scenario. She charged her customers, everybody paid their sales tax. She never paid the sales tax. They literally came and put a chain eventually around the door and would not let her run and operate her business. Therefore, she lost the business. She wasn't able to come up with the money to pay this off, and she just had to end up abandoning the business basically. And she took out lines of credit against her home that she had paid off, maxed those out, and it didn't turn out great for her. So another instance of sales tax. So here's a pro tip. If you are a business that has sales tax, the sales tax money that you collect is not your money. It is these agencies' money, the state's money. The minute that deposit comes in, you should separate that cash so that you are not tempted in any way to use it as part of your operating cash. Yes, I know you may not have to pay it out for a month to 3 months, which might make you think, oh, I have some time to come up with this and recoup it. But my God, is that a dangerous mindset? And I have seen it so many times that when people go to pay their sales tax, they're like, what? I owe 10,000? What? They don't realize how much is racking up. They just think it's little amounts here, $10 here, $28 there, a couple $100 here. They don't realize how much is coming. They go to do their sales tax filing and they can't pay it. They have to make payment arrangements, but that's in addition to keeping current. So everything just snowballs. Move your money out of your operating account, set it aside if it's sales tax. I highly advise doing monthly estimated payments because there's never an instance where you can't do that. Then it gets the money out of your account. You're not tempted to use it. It pays down what you're going to ultimately owe in 3 months, and it keeps you in good standing. So use the sales tax modules in your accounting software, separate the actual cash, make monthly estimated. You can't go wrong if you're doing all those things. All right. So the next one is another contractor. He was going through a divorce and his books were a mess, and he was very tired of trying to figure out where he was in his business. And in the meantime, his divorce settlement was based on his financials, which is what his tax returns were also based on. So for a few years, he had been running his business, not really doing it right, but just kind of here, I'm making an effort. Gave his QuickBooks reports to his tax preparer. His tax preparer did zero due diligence in confirming the accuracy of these numbers. That's another red flag I will warn you about. If your tax preparer is not asking for access to your books so they can physically go in and see that all the transactions are legitimate, are balanced, are reconciled, that's a big red flag, because then how do you know that what they're doing is right? The burden of proof on a business owner when you get audited is on you, not on your tax preparer. Common misnomer that your tax preparer is responsible for all the mistakes. They might be fined for having a wrong tax return, but you still have to produce all of the documentation and all of the proof that the IRS or state agency requests in an audit. You do, not them. So this person came to us. He's like, my books are a mess. I know it's not right. I just didn't know how to fix it. And in his divorce settlement, his wife got a dollar amount, and it was based on his books because his tax returns were based on his books. Guess what? The books, once we actually cleaned them up and went back and redid them, were so far from reality. He had been way overpaying her, which is, great for her, I guess. But in his world, he had the weight of the world on his shoulder. Now he has to pay for this divorce. He has kids, so he's also paying child support that was inflated. And he was trying to run a business, manage a business, pay his employees, and the whole 9 yards. So, nightmare, because it took him, I think it was 20 something thousand dollars to do the cleanup and go back and fix things. That's an expense he wouldn't have had if he had been keeping it up or working with someone along the way. And the results that we found, then he had to go amend those tax returns because they were so far off so that he could go back to court and spend the money for court to get his child support or spousal support reduced based on reality, not what his tax filings had originally said and his books had originally said. So long run, it was a good exercise for him to do, but he cost himself so much money and stress because he hadn't been keeping it up correctly. Another contractor came to us at one of our speaking events, and he again was also going through a divorce, and he just knew in his mind that they did not make the money that was reported on the QuickBooks. He was like, it says I've made $6 million. I have not made $6 million. I do not know what the heck is going on. Nor did he have the expenses to substantiate making $6 million, which means his margins were completely blown out and he had all this profit, which is what he had to pay taxes on. Well, again, in the divorce, it's based on the numbers that you can provide and prove. So his books say this thing. So he came to us and he's like, please help me. Turns out he had over $1 million in overstated, duplicated sales because the people that he had hired to do his books did not know how to use the system correctly and were not matching up deposits to the invoices. And therefore, the invoices were reporting as income as well as the deposits that they were tagging to income. So, yes, we were able to find that and correct that. But he had been paying through the divorce and all of the obligations based on this inflated number. We went back to 2015, I think, for him. So it had been a rolling problem since 2015, millions of dollars in total, but 1 million in that 1 year was duplicated, all because he did not know how to look at a report and know that it was wrong. You don't have to know how to do the work. What you should always know is how to look at the reports. If you get no other help, then how do I read these reports? How do I look at this and make sure it's right? I highly advise that for every single business owner. Because if you're not looking at your numbers, you have no idea what's going on in the background and you end up in cases like this. So once again, we fixed it. We found out where the mistake was being made. He had to go back to court, back to his tax filings, amend tax returns from years back to get the corrections made, and then fight the fight of explaining this to the ex person who was like, oh, now you want to pay me less? I don't want less, and that just is another big problem. It has nothing to do with us, but it's all because he just didn't have good books to begin with. And that could have all been saved and not had to have cost him that money and put him through that stress. A plumbing company that we have worked with, again, decided because they were a new startup company that they didn't need to bother to do any of the things that were compliance related until they got bigger. And so they started in 2023. The R&S Corporation, they actually made money. They were not suffering financially. But instead of putting themselves on payroll, the officers of the corporation, they just took draws. They did not put themselves on payroll because they didn't think they needed to. It didn't really matter. They also were paying every single plumber that was doing work for them as a contractor. When you own a company that provides a service, any person that's doing the work that is the service that your company provides does not qualify as an independent contractor. For example, I am an accounting firm. I have an accounting firm. Anybody who's providing accounting services that works for me cannot be a contractor because they are facilitating the scope of work that my company advertises that it provides. That is one of the major rules about making sure your contractor employee qualifies or employee qualifies as such. So this is 2023. 2024 comes along and they don't pay themselves on payroll. They start payroll in about I think it was quarter 4 of 24, just for the officers, not for these vendors that should have been employees. We're now in October of 25, and guess what happened? They're getting audited. I don't even know what prompted this audit. It could be the fact that their taxes are showing they're making all this money, but they're not turning in the proper documentation to substantiate it. I don't know. But now we're in this mess because they want to see back to 2022 records. 2022 is when they formed the company, but 2022 is not when they started actually making money in any way. So they have to find a way to prove that they were not in business in 22 and then provide all the documentation for 23, 24, and 25. And in the providing of that documentation, they're basically showing they never paid themselves on payroll. They took draws, and the rule about reasonable compensation for officers, S Corp officers, is you have to pay yourself a minimum of reasonable compensation. And there's a whole analysis, a very specific way to figure this number out. However, if you actually cannot afford to pay minimum of reasonable compensation, that's okay, as long as you do not take any distributions, any draws from the business. So basically, until you've met that reasonable compensation, you may not take draws. And all they took was draws. And all they took was draws until quarter 4 of 24. So now they are being assessed reasonable compensation, penalties, fines, and interest from 2023 to 2024, which means all the draws that they took are now have to be taxed. And because they never paid those payroll taxes, it's a huge fine on top of the taxes themselves that they have to pay. In addition to that, they did not 1099 their vendors in 2023. They did 1099 their vendors in 2024. So in 2023, they have a compliance, what is it called? A compliance, I lost my word. They're out of compliance in 2023 for no W-9 on file and no 1099. That is a per vendor fine for that state of $3,000. Now that's actually low. I've heard of other states charging up to $5,000 per person. But in 2023, the fine for not having a W-9 and 1099 on file is $3,000 per. So they have to now pay $3,000 per vendor that they didn't 1099 or have the W-9 on file for in 23. In 24, they did 1099, except their vendors didn't qualify as 1099s because they were performing the same service that the company says advertises that they do, which means all of their 1099 payments are being reassessed by the state as wages. Therefore, the back payroll taxes on those wages that were never paid are being assessed, as well as the penalties and fines for never have filing them. And get this, there's an additional fine for not filing a W-2. So just the form is a fine, not just the money and the taxes part, but the form itself has not been filed because obviously they didn't run through payroll, so there was nothing to file. That's a lot of money right there. That cost him so much money just because he decided it didn't matter to him, it didn't apply to him to follow the rules and to seek somebody else out who could help him follow the rules and do things correctly. It's common. It's very common that a business owner doesn't know everything what to do. Yeah, we all don't know what to do when we start our business. Find somebody to be there for you in your corner that knows what you don't know. And then listen to them. Oh my God, listen to them is like the number one next thing. Find somebody, then listen to them, because I can't tell you how many people I've personally helped over the years or tried to help who have asked me a direct question or asked me directly to help them. And then when I say this is what we should do, they decide, I'm not going to do that. Nah, just, I don't really need to. It's not important. That's not how I want to do it. That's not what I think should be happening. Doesn't really matter. Okay, the next horror story that I have for you is I had a very lovely consulting client who came to us because She could not trust bookkeepers anymore because she had one steal over $100,000 from her very small business. And the way that this person went about doing this was two ways: cash. So she just neglected to record any cash sales, or very, very few compared to what they actually were receiving. And she knew how to do all this, and no one was watching her. No one was checking up on her. No one was looking at the books to make sure it aligned with the point of sale system. There was no point of sale system for a period in time because it was kind of like a manual small town process um, of trust. And so cash deposits weren't being entered and or were being voided, but the cash was there. So she was taking the cash, and she was doing fraudulent checks. So what would happen is, sorry, my nose itches right in the middle of my mini masterclass. She would write a check out to herself in QuickBooks, go to the bank, cash the check, come back into QuickBooks, and put a new vendor name on that check. So it looked like a supplier, the electric company, something like that. Looked like in QuickBooks, everything aligned and things looked right. Well, one day when she was out sick, one of the vendors that hadn't been paid in about 6 months called and just happened to say, it's been a while since we've been paid. Do you think we could get a payment from you? And of course, the owner then went, oh my God, really? And she went into QuickBooks and it says, no, look, we've been paying you and they've all cleared the bank. So then she ordered the check images because everything looked aligned and reconciled and paid. And that is when she saw that on the check image, the name was originally the bookkeeper's name. And this was her employee. This was not an outsourced person or company. So she pulled all the check images for the last 2 years, and the total was astronomical. I said within the $100,000 range, but that didn't include the cash. And then she started digging and found out that the cash was also missing. So, to the tune of over $100,000, she took this person to court. The person happened to have a severe gambling problem, and that was what was going on here, or the basis. You never know what people are going through in their personal lives, and they do desperate things when they're desperate. So the court mandated that she pay back this money, but guess what? She doesn't have money. She foreclosed on her house. And so the payment arrangement that they settled on was $50 a month for basically the rest of her life. So imagine, as a business owner, you've worked so hard, you work long hours, you pay these people out of the money that you would be making if you didn't have to pay them. They steal $100,000 from you, and all you get is $50 a month forever. And like, it makes no dent whatsoever. You do not recoup that 100,000. Terrible story, nightmare story. I got two more for you. A customer was not recording their checks as they were writing them. They were waiting until they cleared the bank in QuickBooks Online. Major no-no. The second you know a check is leaving your office, you should be recording it right then and there. Otherwise, you have no look at what is outstanding, and you also have no idea what your real cash flow position is, because in QuickBooks, it will always know more than your bank account. If you're relying on your bank account to tell you how much money you have, it's lying to you at all times, because QuickBooks, if you're doing it properly, will know your outstanding checks, your incoming deposits, what you have going out on auto pay, the whole 9 yards. So this person in particular did not remember that they wrote a $20,000 check to a supplier who they had racked up a really high balance with, and that supplier had cut them off and said, we need you to pay down a significant portion of this bill before we're going to let you use us anymore. And unfortunately, they needed to use them to make the money that they were making, so they wrote a $20,000 check. The supplier ended up taking quite a while to cash it. We still don't know why, or we didn't know why at the time. When this check cleared the bank was the week of payroll, and this customer had completely forgotten it existed. They were relying on the money in the bank to tell them if they had money. What happens when $20,000 comes out of your account? It's payroll week and you don't happen to have the money to cover payroll. They did not. They had to defer payroll. That caused a lot of problems and tension with their employees. I know one employee in particular quit after that because they couldn't afford to go to work and not get paid, which most of us cannot. So big problem, all because they just didn't put it in the system as it was happening. Could have been prevented. They could have seen, oh gosh, once this check clears, we're going to have no money. We need to do something about it. And they could have tried to borrow money. They could have transferred money from a savings account. They could have stopped the check from clearing if they needed to in order to pay. They could have called their supplier and said, please, could you please not cash this until next week, whatever it was going to be. But they could have gone out and tried to collect money they were owed. None of that happened. They bounced payroll, or they actually couldn't even make payroll that week. Big problems and very stressful on everybody. The business owners, I can't tell you the stress I feel about making sure I take care of my employees. They are my first priority. And there have been times as a business owner, I have absolutely not taken a paycheck for a long time. I have not been able to pay my personal bills. I have not been able to grocery shop the way I would like to grocery shop. It is just the reality of a business owner. You take care of your employees first. Otherwise, you don't have anybody doing the work for you that makes you ultimately down the road the money. So to have the stress of not having to being able to pay them, to have to deliver that message to people who are depending on their paycheck for their families and themselves, that's really hard on a business owner, not to mention then the employees and the stress it puts on them. Last one, I had two customers I have seen this with over the years that did not pay their payroll taxes for a very long time, years. We're talking years. So when you run payroll, the net pay comes out and then your taxes come out separately. Well, back in the day, before everything was mostly automated, you could elect to just make payroll net and then send in your payments manually. Why anybody ever chose to do this, I have no idea. But these two companies in particular chose this route, except nobody ever sent in those payments for the taxes. They kept all the tax money, even though it was withheld from the employees' paychecks. Big time no no. Now, with one company, it was basically him stealing the employees' wages because their wages were deducted and it was his responsibility to pay them on their behalf. So it came back on him. We had to do a full audit of the account, trying to prove that he made the payments that he did not make. So back payroll taxes, penalties, fines, up the wazoo, thousands and thousands and thousands of dollars. Now, the other company did not even know this was happening because once again, they had hired somebody to do this work and nobody was checking on it. Nobody was confirming it. Nobody was having financial meetings to review the numbers. Nobody was looking at reports and finding out that their tax liabilities were accruing, 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 and never going down. Nobody knew for 10 years. How this is possible, I just don't know. In 10 years' time that you've never checked on somebody's quality of work and you're just accepting that things are the way they are. So it had snowballed so gigantically by the time that we got them that they also, on top of over $100,000 in back taxes, not including penalties and fines and interest, they got another $80,000 slap for not having filed the forms themselves, even. So, this person that they were employing was paying payroll, was figuring out what payroll was paying the payroll checks to the employees, was not sending in the payments for taxes, and was not filing the proper forms. 10 years. That goes to show you, too, you never know how long and backlogged these agencies are, and they can come at you 10 years later and say, prove it. We don't show that you paid us, prove it. Not just the 7 years that is kind of standard, but if once they get going and they know that they're missing money, you have to prove it. So, in finding all of this out, $80,000 for not filing the files, plus over $100,000 in back payroll taxes plus the fines, penalties, and interest on that $100,000. Massive, massive mistake. And all the while, they paid this person her salary to perform the duties that she performed. There's literally nothing they can do to get that resolved except to resolve it. Like they literally have to start from scratch in paying down these penalties and fines. So those are just some of my horror stories over the years. Common denominator, bad books, and not looking at your information, not knowing what you don't know, not working with somebody that can help you. Now, in some of these cases, they were working with someone who took complete advantage of them. So those are very unfortunate, uncommon, but does happen circumstances. So if you ever have a little feeling like back of your head, like something just might not seem right, or you get this weird vibe, trust your gut, look into it, bring in a third party to kind of review what's going on because they'll see things that you may not see or know to look for, and they can give you guidance as well. So I hope everyone has a safe Halloween coming up in a week from today, a week and a day from today. I hope you go trick or treating. If you're going to dress up, have fun with that. I'm not a dress up girl, but I am going to do a fire pit and candy and things for the kids. So I appreciate everybody hopping on live or during the replay. And we will see you again in 2 weeks for the next mini masterclass.